Whoever speaks first loses.
Sorry, I appreciate the call. I really have to give this some thought and talk to my wife about it. Can I call you back?
They don't know, right? They gotta think about it. They gotta talk to their fucking wives or the fucking tooth fairy. Point is, it doesn't matter what the fuck they say. The only real objection that they have is that they don't trust you guys. And why should they trust you? I mean, look at you. You're a bunch of fucking sleazy salesmen, right? So, what do you say?
You mean to tell me that if I put you in at Union Carbide at a 7 and took you out at 32,
Texas Instruments at 11, and took you out at 47?
U.S. Steel at 16, took you out at 41.
You wouldn't be saying to me right now, Chester, pick me up a few thousand shares of Disney on the spot right now. Come on.
I mean, honestly, Kevin, honestly, seriously?
I don't know you. You cold called me. You're a total stranger.
I am in complete agreement with you. You don't know me. I don't
just
know
take a
you.
moment to introduce myself to you. My name is Alden Kupferberg.
Bobby Feinberg.
Chester May.
I'm Senior Vice President at Stratton Oakmont.
And I plan on being one of the
Top brokers of my firm next year.
And I'm not going to get there by being wrong,
I
Stanley.
do want to say that. You sound like a pretty sincere guy.
It's not going to make you rich, and it's not going to make you poor. But what this trade will do is serve as a benchmark for future business, Kevin.
Do you feel comfortable with me now, Scott?
And then you'll know for sure that you finally found a broker on Wall Street that you can trust and who can consistently make you money. Sound fair enough?
Yeah. I gotta say, I'm pretty impressed. What do you think?
Kevin, you give me one shot here on a blue chip stock like Kodak. And believe me, Kevin, the only problem you're gonna have is that you didn't buy more. Sound fair enough?
Shit, my wife might divorce me, but yeah, let's do it.
Excellent choice, Kevin. How much you want to go for this time?
Let's do $5,000.
We try 8,000, Kevin.
All right, let's do 10.
10.
You want to do that?
Excellent choice. Kevin, let me lock in that trade right now and get back to you in a few minutes with an exact confirmation, Kevin. And welcome to Stratton Oakmont.
Thanks, man. I'm gonna have a beer. This is fun.
Always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. You know, it's hard enough to get the economics right here. These are difficult things, and if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And you know, we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
Welcome back to Not Your Advisor with NYU Grad on Wednesday, May 1st. We have a lot to cover today, and I'm in a mood. It is story time. So you'll have to wait for the breath numbers. But for the past few weeks, looking at the market action intraday, overnight, after earnings reports of the Mag 7, after today's FOMC meeting, it's clearly evident that Wall Street sell side, as I said yesterday on the podcast, is distributing. They are selling their stock. Couple things. If you follow me, I start each podcast with breath readings. The breath readings were like, outside of maybe like one positive day, we're looking at like 11 to 12 straight days of negative breath. And this is amidst intraday action where we open up hot and close down, or we get great earnings releases from companies and they're sold off. China news on Tesla, Google News on dividends, Microsoft News on earnings, Spotify, you name it. It's all been sold off. And even leading up to the Amazon release on Tuesday, I noted it doesn't really matter. It just seems like every single piece of good news is being sold off. So it's being distributed. The sell side is in sales mode. And the instructions are every bit of good news you sell. And I want to start with the story here because although Wall Street and financial advisors and the business of brokers has changed considerably with the internet. Because when I was at NYU Stern, .com had just started, right? In 95. Mass adoption. Like we still had like Netscape as a browser. We still had compact computers, gateway computers. We had Ask Jeeves. We had Pets.com. It was the wild, wild west of the internet. So at that time, we still had penny stocks, like Boiler Room, over-the-counter pink sheet type brokers who were just cold calling people like on Wolf of Wall Street. And I always talk about the buy side and the sell side. And I won't get too much into it today, but there are two sides of Wall Street. And the sell side controls a lot of it. The buy side are just like the sales and marketing end of Wall Street, like the brokers and, the analysts, anyone, puts out ratings, trying to sell stuff, funds. The sell side is like traders, back office people who you never really see, who make the real money. So during Stern NYU, I had the privilege of working for free for one of the top, at the time, one of the top advisory institutions on Wall Street. It was a big deal. Their name was plastered on Park Avenue. And they were the largest. Assets under management, marketing spend, soldiers of advisors. They're the largest. And one of the things that, and again, I'm working for free. I'm an intern. But my broker that I was interning for was as cool as shit. I'm not going to name his name. Don't want to get him in trouble. I saw things that I should not have seen at that firm. But one practice, which you may not know, was the sales arm, which is the brokerage arm. So what they would do, and I had a hand in this because I saw the process happen, because I was only like a sophomore, junior at the time, but I was helping the broker do interviews for graduating classmates or graduating students of across all colleges across country for inbound applicants to be brokers at this firm. And basically what goes on at that time of all brokerage houses is they'll hire, depending on, nationally, hundreds or thousands of brokers straight out of college. But at that particular office, they were going to hire like 25, I believe. And there were like, 100 applicants, right? And I'm like literally going through the freaking resume, helping the broker sift through for shits and giggles, like who are we going to hire, that class. And basically what happens is, let's say you get 25 new hires at this brokerage house. there's going to be, I'm just going to name a fictional person. There's going to be Timmy or Sarah, who is, the daughter or the son of a top executive at this firm or a friend of the firm. And they'll be in that class. And they'll start going into sales mode, pounding the phones. They get a lead list of people in Chappaqua, Norfolk, Long Island, Hamptons, Connecticut, Westport, wherever, Midtown Manhattan. And they just start pounding the phones, cold calling, trying to get leads, trying to get new client signups. And what happens after a certain amount of time is they cull that list from whatever, 25 to 12, then to 5. But during that time, all the effort from all 25 potential candidates vying for this role, there are leads to be had. Then you are ended up with 5 potential candidates. Maybe they'll pick, let's say they pick 5. But Timmy and Sarah, or Timmy or Sarah, because they have a leg up on this process, they're going to get the best leads of all the hard work of the 25 people from the beginning of this process. And those favored candidates are going to get the best leads, and not only from the new cold call list, but existing clients and prospects that that firm is already generating from their marketing activities. So just understand that Wall Street, although the brokerage and advisory division has changed a lot because of the internet and online brokerages, that culture, while is diminished, it still exists. The bro culture, the sales culture, the bonus culture, it's still there. And the reason why I'm saying this is it's hard to kill this culture because it's just so ingrained in the industry. And every time I hear pundits, even Jerome Powell speaking on the podium, I just hear Leonardo DiCaprio and The Wolf of Wall Street. And just all of the pitches I've heard throughout my life through the financial industry. So just know that's how Wall Street works. It's a sales and marketing engine. I noted yesterday on the podcast that all stocks are sold. Bill Carra taught me that. And this is what I mean by that, right? Like, did you really buy Bitcoin? Or was it Kathy Woods that convinced you over 4 years of bombardment on television? Did you really invest in Apple? Did you really make that decision to buy Nvidia? Where was the genesis of that idea? You don't need a broker cold calling you anymore. It's all over the internet, television, your inbox, your friends, your peers. All stocks are sold. So be careful when you think to yourself, I am up 100% in my effing portfolio because I'm a genius. All of those positions were probably sold to you somehow or another. So, I don't know if you saw the market today. It was closed until 2 o'clock before the FOMC. I told you all yesterday we'll see volatility in the morning and it'll die down into the lunch hour, and then showtime. 2 o'clock, the news comes out. 2:30, Jerome Powell gets on the phone to cold call America. I have rarely seen the markets go south while he's talking or addressing the media. We rallied hard while he was talking, preaching to the American public And as soon as he stopped talking, we sold off. We sold off hard. We lost the entire freaking pop. So I hope you all see a theme developing here. All of the volume to the sell side, all the volume is to the sell side. Every bit of good news is sold hard. So this is Wednesday. Thursday we have Apple after the close and hundreds of other earnings, but let's not kid ourselves, okay? Your dog owns Apple. The dog that you don't even have owns Apple. Over 1,000 ETFs own Apple, okay? Now, I don't know what they're going to report. They have a history of under-promising and over-delivering. We all know adoption of the iPhone 15 is shit. We all know the Vision Pro adoption is shit. They lowered their shipments for the Vision Pro goggles. We all know they've given up on autonomous vehicles. So at their scale, at their size, where are they going to get growth? Is the iPhone 16 with AI, generative AI functionality enough when Samsung, Huawei, Google Pixel all already have this? So we'll see. We'll see what Apple says on Thursday. But if the trend is your friend, they're going to sell Apple off. So that's my take on today's action with story time. Let's keep going here. So now let's dive into breath. And I'm sorry for that tangent, but I needed to get that off my chest. So breath, we had 170 new highs, 149 new lows. 50% of stocks were advancing versus 46% declining. 70% of stocks were below its 50-day moving average. Not good. 42% of stocks are below the 200-day moving average. That hasn't moved much. What stuck out? Basically, another, sell the rip type day. I don't know what else to say. What was strong? Let me just go through this. There was a few. I'm going to try to avoid any of the short ETFs. You had Carvana up 5.03%. Uranium up 4.25%. VinFast Autos up 3.9%. Instacart bouncing up 3.9%. It's just a bounce. Rivian up 3.48%, Reddit up 3.24%, Coinbase up 3.02%, Roblox up 2.87%, KRE regional banks up 2.57%, Roku up 2.55%, Amazon 2.29%, Uber 2.29%, Extreme Networks 2.23%. I think they reported earnings this week. MongoDB 2.23%, Meta 2.1%, and Zeta Global up 1.9%. What was weak? I'm not going to go through all of these, but here we go. These are all percents, all down. SMCI, 14.03%. Sweet Green, 11.39%. DJT, 9.61%. AMD, 8.91%. Kura Sushi, 6.89%. Kava, 6.25% after being strong. ARM Holdings 5.85, Dell 4.7, Broadcom 4.42, Nvidia 3.89, Boyle 3.59. A lot of Bitcoin is red today. MicroStrategy down 3.45. Lam Research 2.94, SMH the semis 2.91, natural gas 2.79, PayPal 2.62, ACMR 2.35, ASML 2.22. UNG natural gas down 2.08%, Tesla down 1.8%. So mixed bag, but all of the action was after the FOMC. That was a pretty nasty turnaround. But if you follow me on Substack Notes, I was tweeting. I'm sorry, not tweeting. I was putting out on Substack Notes that we're going to sell off. It just felt to me that we were going to sell off here after that bounce, and we did. Free members, thank you for tuning in. I will see you all after the Thursday session. Keep watching the yen, the Mag 7, 10-year yield, obviously the Apple earnings, tech layoffs, credit card delinquencies, true rate of unemployment. Those are all things you all need to watch. Premium members, please stay on so we go through some charts.